Hey everyone, this is a trader investor coming to you on a happy and sunny, it's beautiful outside Friday morning, Friday, April 16th. And I want to go quickly over my IWM position. Yesterday I explained how we had a good gap up, but we are staying above the area of accumulation. We really tested that a few times. We created some liquidity, and I had entered at a sign of strength when we were testing this liquidity area. When we were testing these highs, we broke a little bit, but for all practical purposes we remained in those highs. And you can even see on a closed basis, nothing closed below these lines. These lines were, the highest closes here. And if we want to shift it up a little bit to the open, then we slightly went below it. So overall, because the way I look at support and resistance, for me it's just an area, it's not an exact point. I was happy with this hold, and I entered call positions. My target was the 226.60 area. The expiration is today. So I exited all of my positions when I saw this. And I'll explain what I saw and why I saw it. Yesterday we opened and we immediately collapsed. And we didn't even come close to the open price. So today we opened with a gap, and price went up a little bit and then it started to come down. So I immediately closed at the open price because I felt like the market was going to close this gap the same way it did yesterday. And what did the market do? It closed that gap. It's okay to exit positions like this. I'm okay if price goes and hits my target. I'm okay because I locked in my profit when I wanted to. I was not forced to exit this position. I just saw weakness, especially being an expiration Friday. I saw weakness and I exited my position at the open price. So this is how I look at markets overall. I have targets, but I don't wait until those targets are hit if the market is showing me it wants to do something different. And even right now, it created this 15 minutes opening range, but it's staying within that range, and the VWAP is below the mid. So this is, for me, this is a sign of weakness. We could see something similar to this like we did yesterday, and price could start to reverse. And if it does that, I might enter new positions, but for now I'm just seeing continued weakness, and I just wanted to give you a quick update on why I exited that position. So let's turn over at the long-term outlook. Like, we go to the hourly chart. Our hourly chart again is showing we still have this strength, even though on a 1 hour on a today basis we have a small down day. It could still hit our target. The price could continue to move up, not just to our target, it could go all the way up to our order block up here. But I only act on it when I see price giving me those signals. And of course we have this liquidity up here, liquidity created by these equal highs here. So double top, we have some liquidity, so price could try to clear that stop area. For all of those who went short here who have not taken profit, price could come up here to clear those stops and go back down, or it could clear those stops, clear another stop for people who went long and go back up. I don't know when that will happen, how that will happen. I just wait. And all I know is people who went short, who did not take their profits somewhere down here, when price is reversing, they're hurting right now. Even though they're in positive territory, they're still thinking, oh, it's about to stop me out. They're panicking. They see this down movement. They're happy. It opens up here and they see a down movement. They're happy again. So, you don't know when price will hit your target. You don't know when price will reverse. So it's always a good idea to take profits at some signs of trouble. And sign of trouble here is these highs will act as support, like they did here. So you don't have to come to an exact point. So as soon as price reaches near these highs, it's time to exit. These highs are our first sign of trouble. And if price continues to collapse, great. If not, they reverse. So if you had gone short here, it's critical to look at first sign of trouble. Always look at that. Those trouble areas, meaning areas where price could find support, could find resistance, that should be your target one. And today we're having one of those days, kind of similar to yesterday, but maybe better than yesterday if price decides to reverse back up. So let's quickly look at SPY. See, SPY is also having a down day. Yesterday was fantastic. It opened and it never saw anything below that low of that first hour. Almost open and low were equal, very, very close, like 20 cents, 18 cents difference. But once that happened, it just kept going up. But today it's the reverse. We have this high that is being left up there hanging, and price just keeps going down. Even when we look at the 15 minutes chart, we see that the range is made, but price is now at the other side of this range. So when it's at the other side of the range, one of the things I look at for an entry is we broke this. I want to see it broken a little bit further. Price comes and retests somewhere in this zone, somewhere in the opening range zone. VWAP below midpoint, price below VWAP, and I will enter put option. Maybe not for today, but maybe for Monday, because I can see this gap wants to close. We still have a couple of gaps that we need to close. Further down we have more gaps. That's what I'm looking at, but no entry yet for me on SPY. I just wanted to go over my IWM position and why I exited. And so far that decision was spot on. And wrong decision that has made you money is the right decision. There's no wrong while you make money. Wrong decision that kept you in a trade, in a losing trade, and you not taking profit, or you not protecting your gains, you not having the proper stop, is what wipes out accounts, and that's what makes it a wrong trade. On a trade by trade basis, we can be right or wrong, that's irrelevant. On a consistent basis, we want to be profitable. So if we enter a position, like here I entered here yesterday, if price had closed below this liquidity, I would say this particular trade did not go in my favor, I would exit. And so today it went in my favor and I exited when I saw weakness. So this is critical for you to kind of start to think of it this way. This is a business. Sometimes you buy tomatoes and they rot and you can't sell them in your mini market. Sometimes you buy them and they're very good and you sell them. So the market is the same way. It's a business. You're buying something, in this case an ETF, and if it rots, you get out of it. You just put it in the garbage and don't look back to think about it, and just buy the next set and keep rolling over your profits and keep protecting your assets. The bottom line is risk management. That's why I keep stressing it out here. Risk management is my number one priority. I want to preserve my capital, and I want to be able to keep making money on a long-term basis, very consistently make money, not consistently be on the wrong side. Happy Friday, everyone. Enjoy your day wherever you are, your evening, and I will come back to you with more education. I have a couple of things in store for today and this weekend, and you'll be able to enjoy them and learn quite a bit from those as well. So take care, everyone, and don't forget to subscribe and hit that notification bell. Keep encouraging me. I'm loving the interactions, so don't forget to do that. Take care.